What's up, guys? This is Sam, and I'll be doing the free video for Friday, September 24th, 2021. So, markets just closed about 2 hours ago. It was a pretty good week for the stock market in terms of price action. Closed near the weekly highs, which is always good if you're bullish. And not only that, but then it also closed near the weekly highs with a ton of catalysts and a ton of bad news hitting the market all at once, from the Fed, doing the taper thing, to China and Evergrande and all kinds of other things happening. The market was very resilient. So I am still a bit cautious going into next week. I think a lot of this was a oversold bounce back into resistance levels. I do expect for us to have some wide-ranging chop before the next direction is fully finalized. But at least so far, there's a certain script that the market has to follow after it's taken a tumble. And so far, the market is following the script perfectly. So go back and watch last week's video. I think that was pretty spot on, actually. I think we talked to you about a couple of risk signals, and the three of them that we mentioned pretty much all came through. It was the VIX, the dollar, and bonds. Now, the main one that I would recommend you go back and watch from last week is the bond one, because that one is actually developing into something very big in terms of the interest rate potentially rising higher, and not only rising higher, but trending over a long time significantly higher. So potentially even as high as 2+% on the 10-year. So it's important you understand how that will affect your trade and what you're trading. In in very brief terms, if the interest rates go higher, which is what the signal is saying, the direct trade on that is to short TLT. It's the same thing we told you last Friday. The knock-on trade of higher interest rates is going to be typically energy and banks. There's other things like industrials, materials, transports that benefit from the higher rates, but by and large, I've already done the work for you. It's going to be banks. So anything in XLF or XLE, anything in XLE would work. So with that understanding, just going to put a little bit of homework back on you. If you didn't catch last week's video, go back and watch it. Last Friday's video, I think it was called Machine Head. Have a habit of naming these videos after songs. So go back and watch that. I think we covered it pretty well. You could rewatch it again because going into next week, not much has changed. So it's still viable. However, in the short term, the market is following the script for a potential reversal, even though I don't personally think it's going to be as simple as that. So I do want to bring you a couple of stocks here, just some of the best stuff that's on my list, on my board, things that I'm involved in, or things that I'm looking to buy. So with that said, I'm looking to, I'm already actually in Home Depot. I have butterflies and I have put credit spreads here. We've been talking about this chart for a while. Very clean chart. I like the XLY improvement. Last week when the market fell, XLY actually improved, while XLC and XLK, which were leadership groups, declined, or maybe a better word is degraded in terms of their momentum. XLY actually improved. So that's a phenomenal low-key bullish sign. Inside of XLY, you have Home Depot and Tesla and a lot of other names, but the two of them I'm going to bring you today is Home Depot and Tesla. Weekly squeeze, holding the weekly 21, starting to trend here by holding the daily 21. So any pullback to the daily 21, if you're lucky enough to get one, is a buy on Home Depot. Obviously, you have this flat top here that's been trying to break through for the past 5 days. It hasn't been able to get through, but it's been chewing away at it, right? You have that flat top there. It's just chewing away, chewing away, chewing away. Anyone who's selling there, they're just chewing away. And eventually, all the sellers will be absorbed. And then you can get through, and then you can start testing this previous high up here at 345. That's where my butterfly is, by the way. Aside from that, you have a daily chart that looks good, a 195-minute chart that looks great with that squeeze and trend. So I think it's really just a matter of time. Probably, as long as the market doesn't fall apart next week, probably by next week, you're going to see Home Depot here try to make a legitimate breakout and make that push to 345. So I like butterflies up there at 345. That's what I have. I also like put credit spreads right around the at the money, so the 37.5s. That's also what I have. So that's what I would continue to do. Next up is going to be Tesla. So another kind of XLY conversation. Very strong Tesla here. Very kind of similar to Home Depot in some ways, only because, well, in a lot of ways, but in this particular way, Home Depot had that flat top that we said that it was chewing through to get through the res. So does Tesla. It was at 763, 762 and a half. And you can see here it actually got through today. So it not only did it get through, but it somehow has a daily squeeze in the process of impulsively breaking out, which is phenomenal. You have a squeeze here. You had a triggered squeeze on the weekly, which I don't care about too much. That's actually just a positive because I'm trading these lower time frame squeezes. And your trend oscillator has looked extremely good for a while. So in the for next week, although it seems a little bit like it's going to go higher than this, potentially. But I would look for 788 next week on Tesla, kind of as a minimum target, actually. So very strong chart, extremely strong, especially today, considering that tech was not that strong, and Tesla's up almost 3%. You got to look for that relative outperformance, and you're getting it. Even if you ignore all that, you just trade the pretty colors on the screen. Everything here, from a structure and momentum point of view, is completely aligned. So Tesla higher makes sense. One that was brought up in the room today that I'm just going to piggyback off of was Marvell. So I still like the semiconductors here. Marvell actually has one of the better setups that I see. Fully structured, good looking squeeze. Weekly trend. Looks breakout ready above 64 here probably in the next week or so. So I won't spend too much more time on this one. I think this one's just kind of an old school standard setup with the squeeze, higher lows, higher highs, kind of a clean breakout level to target 64. And then you look to see how high is high. This could take it up to about 68 or so if this were to break out. Very good looking daily squeeze. Nothing wrong here whatsoever. Like Marvell. An interesting one here that is coming up is going to be JPM and banks in general for that matter. JPM is just the one that I would personally go with this dynamic, but if you kind of understood last week's video when we were talking about the interest rates and the potential that they could pop off, and not only that they could pop off, but that they could really pop off and last and keep going higher, then the biggest beneficiary of that is going to be the banks. Specifically kind of like the money center banks like JPM and Bank of America and to some degree Wells, but avoid Wells. So just something like JPM and Bank of America would do better, especially even better than something like Goldman or Morgan. So here on JPM, looks good to me. That's really, I normally wouldn't be looking to trade this if it wasn't for the bond dynamic. So understand that last week's video kind of set the stage with the bond conversation for banks to actually become tradable again. So I do like JPM here. Bonds do have to continue higher, or excuse me, interest rates have to continue higher. Bonds have to continue lower in order for this to really be a leadership group. But I think it's definitely a place you need to focus going into next week alongside with energy. And then lastly is going to be TLT. TLT, I don't have a short in, and I look back on this because I was getting signals that it should be shorted, but I went back and I looked at the chart and I was like, there's no way I would have shorted this at that breakout. And the reason being is because it looked clean. Looked clean to the long side, which would have meant rates come lower up until Wednesday, up until Fed announcement. So you see on Wednesday there how it closes above this resistance level, and it does so by closing at the high of the day with massive volume, relatively speaking. That's a proper breakout. But look what happened the very next day. It gaps down. That's so nasty. It gaps down below the low of the day, plunges through, and gets on massive volume. And then today, anyone who's like, well, that was just a one-off kind of thing, they're met with another gap down and another close near the lows. Very nasty chart. Very nasty. The signals here on TLT are actually, the big signals that I'm seeing are actually basically right over, let me just show you this. So this is the interest rate. See the weekly buy arrow here? That means short TLT. Basically, that's what it comes down to. So on TLT, I don't have a short here yet, and I'll tell you what I'm going to look for because I do want to short this. I'm going to be looking for an hourly buy signal, or excuse me, I'm going to be looking for an hourly sell signal. So right now, because of the gap downs and because of that really nasty bull trap above the highs there on Fed, one, a lot of bulls are trapped, so this really could speed it up to the downside because they're going to panic eventually. And two, at least for now, I do want to wait for a bounce. So what I want to see is these indicators that kind of come down here to the floor. I want to see them hit the floor, go back higher, and then once they hit the inflection point and flatten out near the highs, kind of like this or kind of like that, then I want to short it. So I don't have a short here yet. I think the short opens up somewhere around 149, but more so than just the specific level, I'm looking for sell signals on something like an hourly time frame. So right now you should be closer to buy signals actually in the very short term, but once you get the buy signals and they get exhausted, then they'll turn into sell signals. At that point I want to jump on the TLT short, and I would be good with holding that for the next 2-3 months. So just a couple of ideas for you guys. Go back again and watch the video from last week, just because we packed a lot of information into it, and then you get a chance to go back and see after the fact how it all played out, and then just understand how it affects all the stocks that we've talked about, and make sure that you've done your homework going into next week, because it should be pretty volatile. I would expect for it to continue to be a little bit volatile, so it'll pay to, one, be prepared, and then two, to understand exactly what you're going to trade and on what time frame, so that you can take advantage of the opportunities. All right, guys, that's my time. Thanks for being here. Come and check us out at Simpler Trading. Leave us a like, leave us a subscribe, and I hope to see you for the next video next Friday. Have a great one, guys. Cheers. Hey, guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.